topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Barry G. Fowler, EA, brings you Tax Talk for You right here on W4CY Radio and Talk4 TV. As an enrolled agent and a national leader in tax resolution, as well as trucker, bookkeeping, and tax planning with over 30 years of experience, Barry will break down taxes, bookkeeping, tax planning, and tax relief for individuals and businesses just like you. So let's have some Tax Talk for You with your host, Barry G. Fowler.
Hey, welcome. It's another great day to talk about tax problems, tax solutions. What does it take to get an offer in compromise? Hey, I'm just glad to have made this show this morning. I know we promised talking about Tax Solutions 201 and, how to get the offer in compromise. But, we were before the show talking to a friend of mine, and we were talking about, clients that we do tax planning for, and sometimes they're just headstrong and obstinate, kind of like moving cattle today. This morning out here in the ranch, we're trying to get cattle rounded up so we can take them over and get the artificial insemination done on them. The second step in the process. But sometimes clients are just that same way. It's hard to get them moving in the right direction and get them going. Once you do, everybody's happy. And, so we do tax planning right now. And as we're planning and helping our clients plan for the taxes that they're going to owe for 2024, and even starting to put the plans together for 2025, it's sometimes having that open mind and going ahead and following the herd of, hey, what's the best thing to do and the easiest way to save money on taxes? And that's tax planning. It's definitive to do that. And we'll talk more about tax planning for 2025, how to finish up 2024 in, a couple of the next episodes, as we go. But today we're going to talk about Taxation Solutions 201, offer in compromise. So what is an offer in compromise? We hear it on the radio all the time, but an offer in compromise is an agreement between you and the IRS that settles tax debt for less than the full amount owed. So the IRS offer program provides eligible taxpayers. Now remember, that's eligible. Not every taxpayer is going to qualify. An opportunity to resolve your tax debt. The ultimate goal that the IRS has in an offer in compromise is it's got to suit the best interest of you, the taxpayer, and the IRS. Now, first and foremost, it's the IRS that it's really got to suit. And you got to make an appropriate offer based on what the IRS considers your ability to pay. Now, you got to remember, this is the IRS. And so, their whole goal of collections is getting money from you and I. And, the more they get in, the better job they're considered to have done. It's not compromising with you. It's not saying, hey, you can get away without paying, unless you qualify based on their stringent standards. Now, last week, and if you go back to taxtalk4u.com, you can go back and listen to Taxation Solutions 101, preparing for either an offer compromise or a payment plan by filling out the 433. So here we're going to talk more about that offer compromise, what you have to do and what the IRS is looking for. And just remember, by submitting an application, it does not ensure that the IRS is going to accept it. It just begins the process of evaluation, verification by the IRS. They're going to take into consideration any special circumstances that may affect your ability to pay. Now, the special circumstances does not mean paying for your child's college education or private school. None of that's going to be taken into effect. You would have to actually go back in and prove private school, whether it's elementary, middle school, or high school, is absolutely required and cannot be done in a public school. And that's sometimes hard to do. But before the IRS is going to consider any offer from you, you got to make sure all your tax returns that you are legally required to file are done. And you have received a bill for at least one tax debt included in this offer. So if you just filed 2 or 3 tax returns and you're waiting for them to be processed, and you've got 20, 30, 40,000, we can file the offer in compromise, include those tax returns there with all the dollar amounts, and then file your offer. And then the biggest thing and the biggest problem most people have is, yes, you filed your tax returns, you've received your bill, maybe you're getting ready to file this offer. The biggest thing, the IRS also requires that you make all your estimated tax payments for the current year. So remember that you got to make your estimated tax payments for the current year. So if you're filing right now in 2024, you would have had to make the 3 required estimated tax payments that would have been required already through today. And then make the 4th one in January, and then you got to continue that in 2025. And then if you were a business owner with employees, you got to make sure all required federal tax deposits for the current quarter and the preceding quarters is done. You also got to make sure you filed all your business employment tax returns as well. So we've got to go through and make sure that you followed all these things before you submit it, so that you have a chance at getting an offer accepted. Now, once they do evaluation and verification, they're going to verify everything you put on there. So some other things to consider if you're going through bankruptcy, whether it's business or personal, you're not eligible to apply for an offer. Any resolution of your outstanding tax debts got to take place within those bankruptcy proceedings. If you've got an open audit, or maybe it's an innocent spouse claim, you've got to make sure all those are resolved as well before you're submitting an offer. So those are a couple other things that you've got to go through and look at. Can you pay in full? So generally, hey, if you can pay in full, the IRS is never going to accept an offer. So you can do an installment agreement, or you can do, if you got equity in assets, you can sell off assets or get a loan against the assets and pay this down. Now, that's doubt to collectability. And, there are a couple of other statuses, whether it's doubt to liability or effective tax administration, you can file under. So those could impact whether you can file with ability to pay. So, when the IRS goes through and does this, they give you some exceptions and adjustments and stuff as you're filing. They give you a little bit of allowance on your bank balance of about $1,000, $3,450 against the value of a car. So, they will look at all those things after, what debts and other stuff that you have the ability to pay. Your tax refunds. Now, if you file for offer in compromise, any tax refund that comes during while it's pending, they're going to keep. And if they accept your offer, then the following tax year, they're going to keep your refund as well. So one of the big things to do when you're doing this is you're filing your return, you're making estimated tax payments. You need to make sure that you're paying the right amount in, because if you're overpaying, the IRS is going to keep it. If you're underpaying, it could impact your offer in compromise and get it kicked out. So you need to make those couple things very clear when you're going through and doing this. Now, the one other note, if you are getting a refund and this offer is pending or the offer has been accepted, that refund is not going to be a payment towards whatever your offer was. So, keep those things in mind. So, when the IRS is going through and doing this, the IRS does very deep and thorough investigations of everything on that 433. And so they get into the detail of everything that you have owned or do own. So you got to be ready to answer questions. So if you've had 5 or 6 cars, and whether it was for you or your kids, if you've turned them back in and sold them, those should be off your record. If they went to junk or they're worthless or you passed them to one of your kids, the IRS is going to see that maybe the title is still in your name, and they're going to ask where those are. But if you've traded them in, you have a clear case, you traded it in and got a new car, and you'll be able to show that. Now, I'm going to give you a real life scenario of what happens when you're not really clear and thorough in identifying like property, vehicles, and other things that you own that are of value. And the IRS does their verification process. And we're going to talk about that right after this break.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. Talking Taxation Solutions and solving your tax debt with the IRS. And, we all hear on the radio the offer and compromise and, hey, you can settle for less than you owe and all that. And that in some cases is true, but if you have the ability to pay and you're not submitting out to liability or for effective tax administration, you're just submitting on the ability to pay, then the IRS is going to outright reject it if you do have that ability to pay, whether it's money in the bank, money in the 401k, IRAs, equity in your house. Those offers all will be kicked out and, come back to, hey, having to make a payment. So sometimes partial pay installment agreement is better. Sometimes non-collectible status is better. And sometimes installment agreement is better. And sometimes just going and getting a home equity loan is the right thing to do as well, especially if your house is free and clear, get a mortgage and pay this off. It might be cheaper. But one of the big things is rejection of your offer when you weren't fully honest. So, we've had a client in the past who didn't tell us, and we do thorough checks now. We're not as thorough as the IRS. We're not going to go out and check property tax law filings and deeds and everything else on you. We're going to rely on you to say, hey, this is the property we own, or these are the vehicles that we own or that are in our name. Or we also try to find out if you passed a vehicle or something on to a child and everything, because people do buy cars for their children when they're growing up, and then they turn 18 or 20 and they give them the car. Well, IRS considers that dissipated asset, but we had a client who owned a bunch of property, and in his opinion, it wasn't worthy of disclosing to us, and we had a wonderful offer on the table. He was going to settle for like $100 on about $300,000 worth of debt, because everything we showed, everything he gave to us showed that he could not make a payment, couldn't afford it. But he never told us that he had over 1,000 acres of property worth over a couple of $1 million in today's valuation. He didn't think it was important enough to tell us. And then he sold off part of that acreage to his son, and his son was making payments to him in a separate account that he did not disclose to us, because he didn't think it was any of our business or the IRS's business. Well, that's one way of getting your offer kicked out and sent us scrambling, because one of the big things that you do when you sign, you're going to fill out two forms. You're going to fill out the 433, and you're going to fill out a 656 offer and compromise. And on those forms, you testify that under penalties of perjury, and you submit that everything is correct. I have a dog over here barking, so she's verifying that the IRS can be a pain. And so we had to scramble to get the offer withdrawn real quick, so that she did not submit this offer as a fraudulent offer. And so we passed this off and got this done. And so at least we were able to scramble and keep them safe. Another one of our clients was out there and passed several vehicles to their kids, which is fine. Unfortunately, in this case, the cars were not worth that much, but it did increase his offer by several $1,000s because of the value of the vehicles that he passed to his children. So keep those things in mind. Now, there are a few other things that are really important in an offer and compromise. If you do get rejected, you do have the right to appeal an offer rejection, but you can't appeal the return of the offer. So if you submit your offer and they decide to reject it, you can appeal it. If the offer is completely wrong and they don't like it, they return it, you cannot appeal it. You can submit a new offer, but you can't appeal it. And after you submit your offer, again, you got to remember to timely file and pay all the taxes due on your returns, estimated tax payments, federal tax payments for yourself and any businesses you have an interest in. And failure to meet your filing or payment responsibilities during consideration of your offer is going to result in reject of your offer and the IRS returning your offer. So if you have failed in any of those, that offer is going to be returned to you. Now, if the offer is accepted by the IRS, you're going to have to stay current with all your tax filings and payment obligations for the next 5 years after your offer is accepted. Remember that your offer gets accepted. You now have to stay current with all tax filing and payment obligations through the 5th year. So you got 5 years to stay compliant. Now, what happens? You're 4 years, 10 months into this, and April 15th came up, and you forgot to file an extension, didn't pay the tax that was due. You file the next month in May, and you pay the tax due. The IRS looks at it, and guess what? That offer that's been out there for 5 years or 4 years and 10 months gets rejected. It's done. And all that money comes flooding back to you, and you owe it all over again. And you may be in a better situation than you were almost 5 years ago, and now have to pay all that tax plus interest and penalties that is now currently due. So, hey, these are the things you've got to think about when you're going through and filing for an offer and compromise. And so keep those things in mind as you're going through this, and then decide, hey, is the offer and compromise right for me? So, how do you apply for this? Well, the application is going to have to include the Form 656 for the offer and compromise, a completed and signed Form 433A, which is the collection information statement for wage earners and self-employed individuals. If you have a business, you've also got to complete the 433B OIC, which is for the business, and then pay your application fee, which is $205, unless you meet the low income certification guidelines. And then you've got to make an initial payment offer. And that needs to be roughly 20% unless you meet the low income certification guidelines. So sometimes making a little bit lower offer out there, or an offer paying over 24 months, may get you to smaller initial payment. So you got to consider what's the best thing, for you. And now, your offer is not going to be considered without the completed and signed forms, the 656, the 433A OIC, 433B OIC, and all your supporting documentation. Okay. Now, this is critical. So you've got to make sure you look at the 433 and the 656 form and see what needs to be attached, and attach all the documents, generally 3 months of bank statements. They're going to want to look at your mortgage statement. They're going to want your car loan information and any other debts that you're putting on there that you can qualify for. So, we've got to go through and look at this. And if it's a joint debt, hey, this is easy because everything's coming in and going on there. If it is just your debt or your spouse's debt, and you're trying to go for an offer and compromise, people will argue with us, why do I have to give my spouse's information? Because your spouse's information is required to determine how much of the household expenses are yours versus theirs. And so it'll be split based on the amount of income that's coming in from each of you, and then determine whether or not you can qualify for out there for the tax debt. If the debt is with an ex-spouse and you have joint debt and your ex-spouse doesn't want to be part of the offer, you can submit your own Form 656 to compromise your responsibility for the joint debt. So there's a way to get out of this even if you have debt with an ex-spouse. So, we're going to look at, how to go through and do that in separations and stuff. Now, if you've got some debt with your current spouse and you got some debt that was prior, you may be required to file 2 offers and compromises. You would file 2 656s, file 2 application fees, and 2 initial payments. So unless, of course, you meet that low income guideline. So those are some of the things that you want to go through. So after this break, we're going to talk about completing the application package, and we'll be right back after this.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Trucker Tax Tools handles all your bookkeeping and taxes, no matter what level trucker you are. Life on the road can be taxing, but that doesn't mean that your wallet or time with your family should suffer. Trucker Tax Tools makes your life run smoothly. Go to truckertaxtools.com for a free guide that will give you the tools to never worry about your taxes again. Call Trucker Tax Tools 877-966-2477 or go to truckertaxtools.com now and let the experts keep you trucking. Let's get back to Tax Talk for You with more Tax Talk. Once again, Here's your host, Barry G. Fowler.
Oh, looks like we have a traveling camera. We got it back here. Hey, we're talking offer and compromise. Taxation Solutions 201, how to solve your tax debt with an offer and compromise. Hey, one of the best things, I mean, if you just use it to do this yourself, I don't recommend it because sometimes it creates more work for experts like us here at Taxation Solutions. But if you decide to do it yourself, one of the best things to do is go to the irs.gov, type in offer and compromise, and do the offer and compromise pre-qualifier. And you'll be able to use this tool to determine if you're going to be eligible. Now, the bad drawbacks of this is, hey, it takes what your current situation is and doesn't give you the opportunity really to say, hey, what do we need to modify? What do we need to do different to, make this happen and make this work? But you're going to go through this tool and you'll enter your financial information and your filing status and what the preliminary offer amount is and stuff. So they're going to ask you questions like, are you in open bankruptcy? Have you filed all your federal tax returns? Have you made all your estimated tax payments? Are you self-employed, have employees, and have you submitted all federal tax deposits? And then you'll move on to kind of the next screen out there, and they start talking about your basic information. So if you do answer one of the questions right, like I just did, and I was just playing with the tool as we go through here and did it, it's going to come in and say, like I said, yes, I was in a bankruptcy proceeding. It's going to kick you out and say, no, that's all qualified. But it's going to come in and ask you your zip code and state and county and how many people are in your household and any members that are 65 or older, and what's your total tax debt, including penalties and interest, and what is the most recent year you are requesting. Now, what is this information? Why do they want it? Because when the IRS comes in and is evaluating your offer and compromise, everything is going to be based on national standards. Now, what are national standards? So national standards for offer and compromise is what the IRS allows you to have such things for housing and utilities. Can you imagine that, hey, what sometimes they put down as national standards is way lower than what you have. And, they're not going to deviate from any of that. And, so why do they do that? Because just because you've got a house and you're paying a lot more money than anybody else is, they're not going to allow it. So, they're going to take national standards for housing, national standards for food and clothing and other items. And, so like if we go out here and look at allowable living expenses, national standards, if there are, let's say 4 people in your household for, food, clothing, supplies, personal care products, and miscellaneous, 4 people, you're going to get $2,027 and an extra $386 for each person that you're actually claiming on your tax return. That is not, who's actually living in your house. It's who you're claiming on your tax return. So the IRS uses these national standards and, gives you the guidance on, what you can do and what you can't do. They give you, out-of-pocket healthcare standards, and, those out-of-pocket healthcare standards are, if you're under 65, it's $83 monthly, and over 65, it's $158. And that's, again, each person in the household. They give you that so that are, if you're going to be over that, we would have to prove it. So if you've got something major happening in your household, somebody's going through, major surgery, they'll allow more than the national standards because if you are paying it. Now, if you're not paying it, they're not going to give you anything more than what the national standard is. So if you've got an agreement with the hospital to make, $200 a month in payments, they're going to allow you to do that. But you're going to have to prove it and show them how long you're going to be doing that for. If we use housing and utilities, and we'll just pick one of the states out there. Let's just go to let's do Tennessee. We got some good clients in Tennessee. So in Tennessee, they're going to say, okay, what county do you live in? So if you were to live in Bedford County and a family again of four, you're going to get 1971 for housing and utilities. Now, the really amazing part is with interest rates going up and as high as they are, there are people that have bought newer houses or just bought a house within the last couple of years that there's no way 1971 is going to include it, but that is going to be the maximum that they give you for housing and utilities. But if you live in Coffee County, it's $2,042 for a family of four. So, each one in every county and every state is different, and they have all this available to you on the website so you can see what the national standards are for such things, again, as housing and utilities and stuff. Transportation is another one. So, it's basically going to compose of, the two parts. Your loan, lease payments, ownership costs, additional amounts for monthly operating costs, which includes maintenance, repairs, insurance, fuel, registration, license, inspections, parking, tolls, all that stuff is included in there. And so they do limit what you have. So if you're just using public transportation, you get a $215 deduction. If you have one car, you're going to get ownership costs of $619. If two cars, now you got to remember, there's got to be two people in the household. If you're the only one applying for this, they're only going to give you the one car. But if it's husband and wife, then you would have the two cars, and the two cars would be $1,238. And then you're going to get operating costs, and this is going to be based on region. So they do give you like the Northeast region of $285 for one, $570 for two, but they also give you more money if you're in Boston, New York, or Philadelphia. And same thing like in the South region, they give you 260 or 520 unless you're in Atlanta, Baltimore, Dallas, Houston, Miami, Tampa, Washington, D.C. How did DC get into the South region? I'm not really sure, but they give you extra allowances out there. So that is the operating costs that they would give you, based on that. And that's where the maximum does come in. And there are times that, we sit down and we look at our clients and say, hey, this, you can do this. So maybe you have an old car and your repairs and other stuff are more expensive on it. So maybe it's time to trade it in, get a newer car or a new car, get that deduction, and it saves you on your offering compromise. You got to be careful in doing this because, just because we are talking about it here doesn't mean jump out and do it because it's going to be good for your offering compromise. You've got to go through a complete evaluation. And that's why at Taxation Solutions, we have proprietary software that kind of runs all the numbers and helps us and says, hey, we should do this or we should do that to help you out. And sometimes it is getting a new vehicle. Sometimes it's doing other things in life that allows you the ability to reduce what that offer in compromise is. But you've got to, look at all the national standards when you're filing that offer in compromise, so that it's right. So when the IRS is coming through and doing this, the IRS is going to ask you to put in and make a proposal. So, that proposal needs to be the right amount, and the proposal needs to be a valid amount. If you are wrong and the IRS does come back and say, hey, you can afford a little bit more, they will give you the opportunity to revise that offer. Or if they reject the offer because of that, you can then appeal the offer on the grounds of what the IRS has messed up. And so, we kind of got to look at that so that we make sure that all that is right. And we'll talk a little bit about appealing an offer when we come back right after this.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Stop spending time doing paperwork. Go to truckertaxtools.com, a solution built specifically for truckers. Truckertaxtools.com makes your life run smoothly. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Well, welcome back. I'm hoping you're enjoying the show. Make sure you connect with us at taxtalk4u.com. Click subscribe over there so you get updates on every episode that we've got coming out. And as we go live, it'll prompt you. Connect with us over on Facebook as well, whether it's through Taxation Solutions or Trucker Tax Tools. You can connect with our show there as well with taxtalk4u.com. We're always glad to have you, and always glad for new subscribers and being able to get information out to you to help you solve your tax problem, lower your tax debt. Whether it's tax planning, bookkeeping, whether you're a trucker, self-employed, owner-operator, construction, whatever you may be in, everybody needs a good professional. Everybody needs somebody to help them figure out how to lower their taxes. And not just by saying, hey, go out and buy a brand new truck because we can take depreciation and lower your taxes. Hey, that's easy. But if the truck isn't, needed, why spend that money to save, 20 or 24%, on your taxes, or even 10%? Sometimes things don't make sense, and having a good tax professional like us over here at truckertaxtools.com makes more sense than just jumping out and saying, hey, this is good. And the reason I say that, I've had some clients come to me and said, well, so-and-so said his tax preparer said they should go out and buy a new truck because it would save them a lot of money on their taxes. And well, that's nice. Well, let's sit down and let's talk about it from a business standpoint first. Because if you're going out and spending $100,000 on a new asset, and you are in a, let's say 20% tax bracket, well, that could save you up to $20,000, but you're still out $100,000. Now, if you didn't need it, your truck's just fine, and there's no good business reason to go out and do it. Not going to, increase your fuel mileage. Not going to, help you move this, further down the road and make everything better operating wise. And sometimes, why do it? If you do need a new truck, well, then yes, it may make business sense to go out and do it. It's like I had a client once that, he had somebody else come to him and told him to go out and buy these brand new, mega computers and spend all this money. And we sat down and had a business conversation and said, what is it going to do for you today? Well, it wasn't going to do anything for him today, but a year or two down the road, it was going to really help him. Well, everybody knows what's happened in computers over the years. Well, we sat there and had to make sense. If you buy this computer 2 years from now when you need it, it's probably going to be half or a third of the price. Well, it ends up being about 1/10 of the price for that same computer a couple years later. And he could have kept the money in his pocket, not been out of it, not had computers sitting down there. He told me I didn't make any sense at all because he was going to save more money on his taxes. He was still out the other 80%. It didn't make sense. So sometimes things got to make sense. Anyway, as we talk about, offers and compromise, saving money on your taxes. I mean, that's what it's all about. If you owe the IRS, you want to get out from underneath this tax debt, and you hear the commercials and you think, "Oh my God, I can do this. Oh my God, I can get out of this tax debt." Well, one, you go through the IRS qualifier. Call us for the free consultation and let us help solve that problem and figure it out for you, whether you might qualify or not. But if you're going to do this yourself, again, you got to fill out that 433A OIC. Make sure you get that form, 433A OIC, collection information statement for wage earners and self-employed individuals. Then fill out 433B, collection information statement for businesses. If you own a business, corporation, partnership, LLC, you're going to need to fill that out because it's going to assist in the calculation of appropriate offer based on business assets, income, expenses, future earnings potential. But if you have assets that are used in the production of income, trucks, tractors, they're going to be allowed to be excluded in these because it is earning income. Then you're going to attach all the supporting documentation with the forms 433A OIC, the 433B OIC, and all of those documents that are required are at the end of the form. Make sure you include them. Copies, don't send the originals. Fill out the 656. This form 656 identifies your tax years, the tax type that you're going to be compromising. It's also going to identify the offer amount and the payment terms. And so when you're doing that, your offer amount must be equal to or greater than the amount calculated in Form 433A OIC or the Form 433B OIC. So, those two forms are going to give you what your offer is supposed to be. And that's why it's important to make sure those forms are filled out correctly, using the proper national standards, maybe even finding ways to modify things that are happening in your life to make the offer better, for you as you're going. And then you're going to include the initial payment and your application fee. So make sure it's a personal check, cashier's check, or money order for your initial payment based on the option you select. So, and you're going to do 20% of the offer amount for a lump sum offer or the first month's payment for a periodic payment offer. And I'm going to tell you, the initial payments are usually not returned, but will be applied to your tax debt if it is not accepted. You can even identify on there which period you want this payment to go to if the offer is rejected or not accepted. If you're choosing to do that and make the payments, do 2 checks, one for the initial offer, one for the application fee, and make sure it's in US dollars and payable to the United States Treasury. I always suggest you go in and do it a personal check so that you can verify that that check has actually cleared the bank and they've received their offer. They do give you an alternative to go in and make the payment electronically through the Electronic Federal Tax Payment System, EFTPS. Now, if you're going to meet the low income certification, don't send any money because you're going to meet it. And so you don't have money to go out there and do this. And I also urge you to do something that most people don't do, and they make the mistake, is make a copy of your application package and keep it for your records. That means everything you submitted. And then, you've got that to look back on when they call you about your offer and they're reviewing and evaluating, so you can identify, what pages they're on. We use header pages in between every document type that we're sending to them. So if you're including bank statements, we put a page in there that says bank statements, mortgage statements, so that some of these people with the IRS, you never know whether they can follow along. But if it's there in a nice, neat package, then the IRS can see that you have dotted your I's and crossed your T's, and you're working through it, and that it's there. If you're working with a revenue officer, let them know that you're sending or have sent an offer in compromise for your tax debt. Sometimes they will make you send it to them, and then they will send off the offer in compromise. If that is the case, follow up with that employee to make sure that they have followed the proper procedures and steps to move this offer from their desk to the offer unit. Now, what happens from here? The IRS is going to contact you after they've received and did the initial review of your offer application. And then they're going to tell you, hey, it's going to be 60, 90 or more days before they'll get to it. And you may get another 60 or 90-day letter again saying, hey, it's going to be a little bit longer before they get to your offer. Sometimes it can be up to a year. If it's been sitting there over 2 years and they have not processed your offer, that's considered an accepted offer. But that sometimes will take taxpayer advocate to get them to put that result in, because that offer has been sitting there and not processed. Things that you need to make sure you do is promptly reply to any requests for additional information within the time frame specified. Whatever they tell you, get it done. Failure to reply timely will result in the return of your offer without any appeal rights. Again, remember that it could be rejected because you're not doing it. So if you're working with somebody, reply to them quickly. If you're doing it yourself, reply to the IRS quickly. The quicker we get the replies in, you can verify and follow up. If you need more time, you can always call them and ask. If they accept your offer, hey, you did great. Most offers that we do aren't usually accepted there. They're usually accepted in appeals. And then you can appeal when you get to there. But if they accept it, continue to timely file all returns, timely pay, make sure you make your estimated tax payments, federal tax payments, and do not fall back into the trap of not paying your taxes or not filing. Make sure you stay in compliance for the next 5 years before you screw up and don't file again. So don't default your offer. Hey, the great news is you don't have to do it yourself. You can call Taxation Solutions Tax Relief. Go to Taxation Solutions Tax Relief.net. If you go to taxationsolutions.net, you can get free consultation to get started. Hey, again, make sure you like and subscribe to our page at Tax Talk for You. Do that today before you forget. Stay in contact with us. Let us know how we can help you, and do that today. Hey, God bless you. Have a wonderful and glorious day.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk 4 TV. Don't forget to check this and past episodes at taxtalkforyou.com. See you next week at W4CY.com.